We're going to start in the United States, where we've had more detail about the world's largest economy, because the rate of inflation accelerated last month, according to official data that was out a little earlier. Now, it adds to concerns that President Trump's tariff policies will push up prices.
Soaring inflation means that paychecks just aren't buying as much as they used to buy. Grocery prices and the prices for most foods jumped by 0.5% last month.
The dollar is failing. Inflation is still too high. And now Donald Trump is trying to force America's central bank to slash interest rates to just 1%. This shocking move has shaken Wall Street and rattled foreign investors who fear the U.S. could stumble into the same nightmare Turkey faced when political leaders hijacked its central bank. Is America really walking toward a Turkey-style inflation crisis? America's economy looks strong on the surface, but deep cracks are showing. Inflation is still running above the Federal Reserve's 2% budget, with the latest core PCE report proving prices remain sticky. Families continue to pay more for food, rent, and energy, while wages can't keep up. At the same time, Washington is drowning in deficits of more than $1.5 trillion, forcing the government to borrow more at higher interest rates. The debt spiral is already raising concerns among foreign investors who are pulling back from U.S. Treasury. Add to this Trump's renewed tariff threats, which risk pushing import costs even higher. The dollar, once untouchable, has started showing weakness in global markets. America's fragile position is clear. Combine inflation, deficits, and political interference, and the foundation of U.S. economic power could collapse faster than anyone expects. Central bank independence means the Federal Reserve should set interest rates without being controlled by politicians. This independence is designed to protect the economy from short-term political games that can create long-term damage. But today, that influence is under attack. Donald Trump has already tried to fire Fed Governor Lisa Cook, a move that would have broken long-standing rules meant to keep politics out of monetary policy. With that majority, he could push for loyalists who would follow his demand for much lower rates. Even more alarming, in 2026, all 12 regional Federal Reserve Bank presidents are due for reappointment, and a board majority could influence who stays or goes. That would open the door for Trump to reshape the Federal Open Market Committee itself. This battle is not just about one governor, but about whether America's central bank can resist political pressure. The outcome will decide if the Fed remains an independent guardian of stability or a tool of power in Washington. Donald Trump has made it clear that he wants interest rates cut to just 1%, a level not seen since the depths of past crises. Today, the Federal Reserve's rate is around 4.5%, and most analysts only expect a small reduction, not a collapse to near zero. Trump argues that low rates will supercharge growth, boost stocks, and make borrowing cheaper for businesses and families. But critics warn that this kind of gamble could unleash dangerous inflation at a time when prices are already stubbornly high. Cutting rates so sharply would flood the economy with cheap money, driving up demand faster than supply can keep up. That means higher costs for food, housing, and imports, hitting ordinary Americans hardest. Markets are also nervous because such extreme moves could weaken the dollar and scare away foreign investors. Trump's gamble is simple: chase quick political wins by forcing lower rates. The risk, however, is that it could plant the seeds of the next great inflation crisis. Turkey shows what happens when politics take over central banking. President Erdogan forced the Turkish central bank to slash interest rates even while inflation was climbing. Food and housing became unfavorable for millions, and businesses struggled to survive under runaway costs. International investors fled, pushing the currency even lower. What began as a promise of growth turned into a spiral of poverty and anger. Turkey's story is a warning. Once central bank independence is broken, trust collapses fast, and rebuilding that trust can take decades. America should look closely because the same mistakes are now knocking at its door. The warning signs in the United States are too big to ignore. Washington is running record deficits of more than $1.5 trillion, and the cost of paying interest on debt is exploding. At the same time, the dollar's dominance is being challenged as BRICS nations trade more in other currencies. Foreign investors are slowly stepping away from U.S. bonds, signaling doubts about America's future stability. Add this to Trump's push for ultra-low rates, and the risk grows even larger. Cheap money could overheat an economy that already struggles with stubborn inflation. The mix of deficits, tariffs, dollar weakness, and political attacks on the Fed looks dangerously familiar. These are the same ingredients that pushed Turkey into crisis. The U.S. may not collapse overnight, but the path is being laid brick by brick. America could be next if nothing changes. The early warning signs of a crisis are already visible in America. The dollar index has fallen in recent months, showing weakness in the currency once seen as untouchable. U.S. Treasury bond yields are climbing higher, which means the government must pay more to borrow money. Foreign investors are cutting back their holdings of treasuries, a signal of fading trust. Inflation expectations among consumers remain stubborn, proving that people still fear high prices ahead. Wall Street has grown nervous, with market volatility rising whenever political attacks on the Fed make headlines. Even the credit rating of U.S. debt has been questioned, adding more pressure on Washington. These cracks may look small to some, but together they tell a bigger story. When currencies and bonds start losing global confidence, history shows the slide can accelerate quickly. America is already showing the same signs that preceded Turkey's crisis, and the danger is growing louder each day. If America loses control of its economy, the damage could spread quickly. In a mild case, inflation may stay stuck around 3 to 4%, slowly cutting into household savings and living standards. A sharper crisis could unfold if rate cuts weaken the dollar, driving inflation up to 8 to 10% and forcing families to pay far more for essentials. In the worst outcome, foreign investors could abandon U.S. debt, capital would rush out, and inflation could surge above 15%. Everyday goods like food, rent, and fuel would become almost impossible for many to afford. Borrowing costs for homes, cars, and businesses would rise sharply, squeezing the middle class. Stock markets could crash, pensions could sink, and trust in U.S. leadership would collapse. Once the dollar's credibility is broken, America would lose its power as the world's financial anchor. Recovery from such a shock would take many painful years. If America loses control, the shock will not stop at its borders. A weaker dollar would push countries to speed up their shift toward other currencies like the Chinese yuan or the euro for global trade. BRICS nations are already working on payment systems that bypass the U.S. dollar, giving them more freedom from Washington's influence. Oil and gas deals could increasingly be priced outside of dollars, shaking the energy markets. Central banks worldwide might cut their holdings of U.S. treasuries and increase reserves in gold or other currencies. This would weaken America's ability to borrow cheaply from the world. The end result would be the slow erosion of the dollar's status as the world's reserve currency. Just as Britain's pound lost its dominance in the 20th century, the U.S. dollar could face the same fate. If that happens, America's global power would shrink in ways it has never experienced before. America's economy stands on the edge, and the wrong moves could push it into a crisis that mirrors Turkey's collapse. The risks are real. Rising debt, stubborn inflation, and political interference are all combining into a dangerous mix that threatens the dollar's future and America's global power. If leaders ignore the warning signs, the world could soon watch the U.S. slip into a storm of its own making. Subscribe now for more sharp breakdowns of global power shifts, economic shocks, and the battles shaping our future. so you never miss the stories that reveal where the world is truly heading.